Good morning. All right. Thanks, Matt. Cool. Okay. So what we're gonna do today is we're gonna discuss what exactly my left side of the screen is. 'Cause a lot of people get confused and they don't understand how to properly, align, utilize this left side. So let me set it up real quick. And then we'll start. Watching during the storm, dude. Oh my goodness. That's wild. All right, 0930 to 1615. All right. So we know that G-Man Labato, Libertari, whatever. What's up, man? I noticed you've been watching all my videos. If you have any questions about options in the equity space, definitely reach out. It can be a whirlwind of fuckery if you don't know what you're doing. All right. So every day we come in here and we put the highest probable statistics on the chart, right? You guys are used to this. And we know that this chart isn't to be traded blindly, right? This chart is to make decisions around, to confirm where we think price is going, to generate ideas for our trades. But it's not like I'm over here trading, like right here we have the Asia OU, right? And it's not like we swipe down, we step above, we swipe down, we step above. Like it's not like I'm jumping on trades here. If I do anything, I've got it on the 10-minute chart and I'm paying attention to momentum, right? Or I'm using this as an area to trail my stops or whatever, right? Right. For example, we know that after 945, 950, the probabilities, if we break out to the upside of the 10 minutes, the probabilities are like very low to reach the other side of the 10-minute, right? Until we hit that 11:45 to 13:15 time frame, right? And then we start looking for a reversal and a continuation trend, right? Or a reversal or a continuation trend of the morning move, right? Which yesterday happened to be a continuation trend, right? And so if anything, I'm looking at momentum there, right? But I'm not trading this blindly, right? There are times where I'll sit here and try to scale into position in London to capture, New York and continue adding to position. But for the most part, this quarter, my trade plan is simple, right? Like every quarter I have, let me put him on. But
Hey,
every quarter, like I usually adjust my trading the performance of the last quarter. And this quarter, like I decided, I'm really gonna learn how to trade proper size with my skill set. Because before I was trading anywhere between 5 to 9 micros, which is very, very well and good, and it allows you to scale in and out properly. However, I'm trying to get to the point where I can trade 3 to 5 minis, right? to match my account size, match what I do on these charts, right? So for this quarter, my game plan was to, take trades that didn't breach 25 handles TP, right? So all last quarter, I sat there and back tested multiple systems, and that would trade this quarter in, and now I'm actually trading those, right? So I recommend you all do that, but like I still do this because I still need to know, because I have statistics upon statistics upon statistics. Like it's kind of wild when I decide to apply those statistics, right? Like the ICP community looks for raids of lows. I have statistics that tell me the highest probable raid of every single 5-minute, 10-minute, 15-minute, 30-minute period, right? So this right here, this 1350, has a statistics of being the raid, right? This 940 right here has a probability of being a raid, right? Just as much as this 950 all the way to 1030. This has a probability of either being a raid or a trend, raid or distribution, right? So now we're going to talk about, because I'm going to knock out the morning workflow, but I'm going to knock it out off hours, off air, because I think what we're going to talk about is very important, right? So this is all the historical data, right? This chart is the historical data, and it just tells me what price is respecting. For example, right, I'm going to share something that me and Costa did. So this was the other day, right? This was the other day. In the red highlighted area was the highest probable New York, right? This was the highest probable New York, right? And what it was supposed to do. And if we put our chart, our morning workflow on it, it would have shown the levels and the probabilities and all that. And right, did we respect? This was the red box was the highest probable statistical direction, right? From a historical standpoint, from what Asia did, from what London did, to where we were, all of it, right? What did price decide to do? Momentum, due to what day of the week of the month, based off of all that, right? Where we were in relationship to NFP Friday and previous month 50%, right? This was the day, because this is actually the NFP range right here, where the red box is. And this is like all the way to like right here is the NFP range. Well, knowing that the historical data was on our charts, by 10 o'clock, we knew, actually it was earlier than that, by like 9:45, right? We knew that price wasn't going to respect the highest probable statistics for the day. So we had to put the other variables in. So let's say this had an 80% probability. We had to put the 20% up top, because that's what it was expecting, right? And so now we're going to talk about, so we know that that's what this whole probability side of the chart's for, right? Right.
Yeah.
Now we're going to talk about what the left side of the chart's for. We got plenty of time. Out of 290, we've only moved 68 handles on the NASDAQ.
Tight.
All right, so we're going to delete all these drawlines now, right? And we know that for me, I don't like looking at order block, breaker blocks, fair value gaps, inverted fair value gaps. I don't like looking at, let's see, volume imbalances. I don't like looking at random levels. I don't like looking at, volume. I don't like looking at, moving averages. None of that I care about, period, right? And it's not disrespectful to those communities. I've seen plenty of people in the ICT space prove profitability through his concepts. I've seen plenty of people through the DR space prove profitability through DR. I've seen plenty of people through supply and demand, auction theory, all these different trading religions. I've seen them all. I've seen people that were profitable within them, and I've seen people who were absolute failures within them, right?
Yeah.
Usually, well, I won't critique what I think happens, right? But for me, right, I think differently, right? I've got my master's in statistics and I got 20 years of being an infantry veteran, right? So for me, like I need more of a fixed constant. I don't like reading live price, right? I, well, I love reading live price. I like having something to measure a live price around that's a
Yeah.
fixed variable, right?
Yeah.
And that's why I came up with these charts, right? Because in my
Yeah.
earlier days, I had a hard time understanding what market conditions were, what was trending, what was ranging, what was reversing, right? Because I kept falling for like this is a stop hunt and this is a change of character or this is single prints or this is excess and all this stuff. And I said
Sure.
I could find them all over the charts. Everything was a lower low and a higher high and a higher high and a lower low. The time fractal didn't matter. Like just confused me. It confused the shit out of me, right?
Yeah.
And I had a hard time very much in the beginning just understanding what the hell was going on. And then one of my buddies, VWAP trader, um, right, this was a long time ago. He said, "Stop trading." He said, "Just journal. Take every single 30-minute bar and journal the task and purpose of it." Right? And I did that, and it led to me actually, unlocking things in my brain I didn't think was possible. Like the like these midlines, right? These midlines on a 30-minute, um, they get returned to a lot, right? And just understanding, what the task and purpose for every 30-minute was. So for me, it was I need a fixed constant, right? And that's what the 5-9 box is. To be honest with you guys, and I've back tested a lot of ICT, I've back tested a lot of theories out there. Most of the most of what you guys look for, whether it's supply and demand, hourly footprints, or PD arrays, or whatever, they're going to happen within that first 10 minutes of the hour, right? And then you're going to get a response from it, right?
Yeah.
Just like NFP Friday is going to be a good anchoring point for the rest of the month. Um, and then understanding like where the momentum is. The hourly boxes show me where the momentum is, right? Because like let's turn this off. Let's rewind to right here, right? Where's momentum? Like who knows? Like it looks like
Mm-hmm.
there is
Mm-hmm.
no momentum here, right? It's ranging, right?
Mm-hmm.
Put this on, and now we see that we're below previous hour mid. We take out previous hour high, and we take out the low. And now we're stepping below the 5-9 box and coming up and finding rejection. Now I can start seeing the story of this possibly being a reversal. And then if I put, oh, it's not going to let me. If I put the statistics back on it, right, usually, right, like there'll be a higher probability statistic here, right? So I built these hourly boxes that allow me to see the market condition, right? So right here, we can see that we're in a range. We're in a range. We're building value areas. We're building consolidation. We're in a high resistance liquidity run. We're consolidating, whatever we want to call it, right? Right? How do I know that? Because the 5-9 box is going down, up, down, up, down, up, flat, flat, right? Well, the midlines are going pretty close
Mm-hmm.
together, or the hourly highs and lows are just being taken out on both sides,
Mm-hmm.
right? So that tells me that we're in a ranging market. Well, when we're in a ranging market, right, as soon as you can discover that, what's the risk profile? Because that was another thing that I dealt issues with, not having the proper risk profile on for the market condition that I was in, right? Meaning, I was sitting here trying to snipe every single thing, right? I was trying to snipe this when it ran this low. I was trying to snipe this after I got stopped out from sniping this. I was trying to snipe everything, right?
Mm-hmm.
And it just, you go broke real quick doing that, right? Trust me, I know. So understanding that, number one, this is a market condition, this is a range, right? Versus like a trend, right? This would be the start of a trend, right? We
Yeah.
can't take out previous hour mid, we take out the previous hour high, we continue going up, we step down, we can't even get back within the hourly mid, we step above the 5-9 box, find support on it, we continue up, and etc. So this would be a trend, right? And then you have reversal points, right? So you have, so right here, there's a reversal point right here. We have reversal followed by trend that leads us to a range, right? So there's three types of market conditions: range, trend, and reversals, right?
Yeah.
And each one of those needs to be traded with a different risk profile and different trading strategies, right? Because these ranges happen a lot, right? So what do? I find different strategies that can trade ranges, right? And I have different strategies that can trade trend, right? And the purpose of my risk profile for a trending market, once I identify that it's a trend, is if I have a higher probability to the upside, let's say Barbie doll pink is a high probability, right? And I'm stuck in this range below here, right? My trend, the way I trade this, and there's multiple systems that I trade with this, is I will sit there and, like I said, I'll trade my 10 MNQs all at once, right? So my entry will be like somewhere within here. The entry doesn't matter, right? And then I will target low hanging fruit. So if I enter 10
Mm-hmm.
micros here, I'll take off 5 right here. I'll take off 3 at the 75 of the previous hour, and I'll offload the rest of the previous hour right here, right? But I'm always going long if I have a higher probability statistic above me, right? If I'm in a reversal, if I see that where the proper time of a reversal or whatever, right? And we're coming in on, because this did have a probability below it yesterday. To confirm it, it was like right around here. Like, let's say this is one of the probabilities that we put on our chart every day, right? And we're approaching it and we're expecting a reversal, right? I'll put on a fourth, so 2 MNQs, right? And when do I do that? Well, for me, it's this simple, right? Like the moment we get above previous hour mid and we step above the 5-9 box, I'll put on my initial contract of my fourth. So we're engaging with 10 micros, right? And if I'm trend trading or reversal trading, right, my a fourth of those 10 contracts goes on during the reversal, right? But this is a high probable area right here, and we're looking for a reversal. So I have to get above an hourly mid, right? And so right here, we get above the hourly mid, right? So somewhere within this hour, we can put those 2 micros on, right? And when I do reversal trading, right, let's say we got it right there. My risk profile is 750. between 750 and 1500, right? But it's down here very, very far away because I will manually stop myself out
Yeah.
if this goes against me, right? The thing I won't accept is being wicked out because I was trailing my stop too early during a reversal area.
Yeah.
Reversal areas are nasty, right? And then what will happen is I'll add to the trend, right? So right here, we step above previous hour of 50%. We take out the previous hour, right? We put on our two contracts, right? It's still early enough in the day, and there's still a reversal period. I mean, for this to actually get up and grow some legs, right?
Yes.
So right here on this hour, we can't get below the previous hour mid. We step above the 5-9 box, and we find footing on it, right? So I can add two more micros right there. This hour, we open up at the midpoint. We can't even get below it. We step above the 5-9 box right here, and we find support on it. You can add two more, right? This hour, we get below it. It doesn't mean I'm going to exit my contract because we're coming up on the 930. And remember, we had the 930 going higher yesterday, right?
Yeah. Yeah.
But it just means I'm going to sit on my hands through all this. Go do something else. Go live your life. Go sit on your hands. Your stop is adjusted, right? Your average cost for these six contracts is around somewhere in this area. Your stop should be somewhere below here. That's 750, so it should have moved up,
Yeah.
right? And then, right, we have four more micros that we need to engage with, and we'll engage with it when it becomes obvious, right? 930 open, scared everybody out that was going long. Didn't scare us out because our stop's 750 below, right? Right? And then when it becomes obvious, we step above the 930 price, right here, this green box, and we find footing on it. That's when I'll add the rest of my contracts, and then I'll offload them
Yeah.
up in here somewhere, right? So that's the reason I built these 5-9 boxes was to identify the market condition we're in, and to identify, to be able to make this proper decision making
Decisions.
around fixed constant. Fixed constant being the previous hour mid and minute 5 to minute 9 of that hour, just like we do with previous monthly 50% and NFP Friday, right? And then so now, and I know what kind of conditions I'm in and what kind of risk profile I should be putting on and which kind of strategies I've backtested. And I've backtested a lot of strategies, right? There's a difference between this. So I look at it like this. This chart tells me the historical data. The white chart tells me the historical data. The black chart tells me the market condition we're in, and if it aligns
Yeah.
with the historical data probabilities, right? And then I know what strategy, which has been back tested separately, I need to be engaging with,
Yeah.
right? The captain's boxes. So put your trading view name in. Put your trading view name in the chart right now, and I'll give it to you right now. But if you don't put it in the chat, you don't get it right now because I'm not. It's not that
Come
time.
on.
It's not the day where I add people to the captain's boxes.
Come on, free man.
Yeah. so now we know the purpose of the historical data charts. We understand the thought process behind these hourly charts. Now we're going to go into what the purpose of this exercise is, right? Determining how many RTH 930 to 1615 have a DNP day trend, directional with no pullback versus DWP, directional with pullback versus range, right? Screenshot this so you can do this exercise. And if you don't have access to the captain's box, put them in the chart, put them in the chat right now, and I'll go through and add you to it right now on the chat. Right? So now, right? We have a time of day. We have a time of day 9:30 to 16:15 where nope, we don't want to do source code. Now we have a time of day where we know we can be in and out of the markets and where majority of the daily range happens at, right, is this time of the day, right, from 9:30 to 16:15, right? That's when majority of the average 10-day range happens. That's when majority of the range happens, right? So what I'm trying to get you guys to do is define your business plan. So you're not sitting here looking at the charts in Asia, in London, and all these inappropriate times that are designed to, well, they're not designed to, but they confuse the shit out of you, right? There's not enough information, right? Remember, I say all the time, you got two types of risk. You got data risk and you have price risk, right?
Yeah.
If price is right up here, right, we're at pricing risk, right? If price is right here, you have data risk. So price risk is up in here. For price risk for longs is up in here. Data risk for longs is right here.
Mm.
Price risk for sells, right, would be right here, and data risk. So your job is to always ask yourself, do I have enough information and am I at a price risk, right? And to balance the two with what you have, right? So now that we know that 9:30 to 16:15 displays the majority of the range, right? We need to start identifying the conditions using these hourly boxes and using the 9:30 on the 1 minute, right, to figure out, where you're at and are you in a price risk or data risk, what market condition you're in, and what kind of risk profile strategy you should be trading, right? So the whole purpose of this is to use to see does the RTH revert to the mean more than it trends, right? And so what you guys should do, this IST one set up for life by this individual who I have no idea who it is, by MK, right? Because it's an awesome tool that is very flexible, right? And then you go into the settings and you uncheck everything and you just pick one box, right? So this time I put New York PM session, and then the New York PM session I put 9:30 to 16:15. It defines the RTH, right? Time cluster by Blue Jay. I actually do know him. He actually built this script specifically for me, right? Time clusters 2.0 by Blue Jay, right? Free, right? Go into the settings, turn off all the time clusters, just put 9:30 on, right? And then now you should have captain's box, right? About this script.
Do you want me to call the names out, Mickey?
Now I'm just gonna copy and paste them.
Yeah, good idea.
Son
Yeah.
of a bitch. Better let me copy. Nope, it's not gonna let me copy and paste. So Barney. JOANEKSTRM. I got nothing. JOHAN.
That's because you're in access
Oh yeah, yeah, yeah.
granted.
I gotta remember to switch over.
I do that all the time.
Eventually, they're gonna make it where I can just put a crap ton of names. Nope.
Yeah, it is. It is a strange way of doing it.
Nope. EKSTRM.
Yeah, it is. pork buns.
Dude, pork
You got
buns.
pork bun. Yeah, add new users, isn't it? Don't
Oh
forget
yeah, yeah,
that.
yeah, yeah. See, that's why you're here, partner. Is it buns? Oh,
Buns. Yeah, good name.
add new user.
Pierre Rec. REC.
I don't know if I want to add Pierre. I haven't never seen him on here before.
Who are you, Pierre?
Yeah,
Cliff.
you just came in here just to G-Man. I know that dude's always leaving comments. Like your volume sucks. I know my volume sucks.
Oh, we got Diplo Woe, Swede 98 when you were back up the top.
Uh, NENAV. Damn. 09. He or she or I don't know.
Nina.
There we go. Let me scroll down. And then Sweden. What's your Lucky Cat? What's your trading view?
I think Lucky Cat's been here before. I may have
Yeah.
it.
All right. So now, Lucky Cat, you can go back and watch what we talked about later once it gets recorded. So it should be good. All right. So now, we need to define what a range is, right? It has to have a definition, right? Because if you're going to define what a range
Yeah,
is, right, you've got to be able to define it so you can trade it, right? Because there's no such thing. Like, listen, guys, like, if you ever worked for the institution or worked in a trading capacity, whether it's buy side, sell side, hedge fund, trader, blah, 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 they don't just let you sit here with capital not being utilized. They don't care. Your job is to trade that capital, right? So I want you to think, and I don't want you guys to go out and do this just yet, but I want you to start doing your free time, back testing different, strategies for different market conditions, right? Because the way you learn what you like and what you don't like is by trying different things, right?
yeah,
You know that you don't like sauerkraut because you've eaten sauerkraut or you smelt sauerkraut, right? But you do know that you like sauerkraut on a hot dog because you've tried it smothered with mustard, right? Same thing goes with trading, right? You can't look at a mentor or a guru or a furu or anybody out there and say, I like how he trades without coming in and doing it yourself, right? Because
yeah,
you don't know if you like how he trades. You don't know if you're going to be able to handle the amount of risk that he puts on, right? Right here, I told you guys I'll put on 2 micros at the reversal point of a high probable area, and I'll set my loss between 750 and 1500, right, for those 2 micros, right? Because I know I have the discipline to read live price and align it with historical data. That my biggest thing is that stop is only if we have like some kind of geopolitical event, some kind of uncertainty that crashes the market. That's the only reason that's in place, right?
yeah.
Because this style of trading, you're going to be adding to and taking away and adding to and taking away, right?
It was a
Um,
key word you just used there, Mickey, which was style.
hmm,
We have styles of trading as well that are appropriate to us as humans, right? Anyway,
hmm.
sorry.
Yeah, but the only reason I got to that point was because I back tested and I did all
Yeah,
these different things to understand and see price the way I needed to, right? To
yeah,
make decisions around, right? And we already talked about it. The reason 5-9 boxes and previous hour mids and all that, NFP Friday and previous month 50%, why that works for me is because like it takes all of this theory because everybody's a fucking genius in the markets, right? Everybody's a 1000% the best trader ever on Twitter, right? It takes all those random theories and it collages them into one thing: the 5-9 box, previous hour mid, NFP Friday, previous month 50%, blah blah blah, right? And it collages them into my ability to make decisions around,
Yeah.
right? Because at the end of the day, and people won't tell you this, they don't really care about you, right? Nobody's coming for you. Nobody's going to be able to teach you the Holy Grail, right? Wildlight, did you give me your trading view name? Yeah, he did. Okay, cool. Well, it's good to draw them out, right? But listen, like, nobody's coming for you. Nobody's here to save you and teach you how to be a perfect trader, right? Like, that's something that experience in building these systems will allow you to do, right? So anyway, back to this, right? Range is defined by pushing away from the 930, green box 930, right? Pushing away from it and returning it to it after 12 o'clock, the hourly 12, or if we test it more for 4 or more hours, right? So that means, right, between 11:45 and 13:15, right, we made a reversal
Mm.
and we're coming back down to the 930 price, right? So all the way during this range, we could have pushed away from the 930, and if it was going to be a range in market or a reversion to the mean day during this time block, we should have continued slowly drifting. We can even
Yeah.
slowly drift down and touch it at 16.15. That would be considered.
Mm.
Michael, send me your trading view name on here. Like, put it on here, and I'll give you access right now. All right. Um. So that's a range in market, right? But a DWP is a directional pullback happens when the market moves away from the 930 and doesn't come back to it. There are arrows that go towards the direction of the 930. When I say there are arrows, that means previous hour, if the 930 is below us, then previous hour lows are taken out, right? And we can see that this one hour, right, took out the previous hour low. And what did I tell you guys about dramatic price movement and instant recovery,
Recovery.
right? What is that? Right, when we see something just breach down like this and recover instantly, what is that called?
Come on, guys.
Like,
Begins
what is
with
it?
D.
It begins with sign of strength, right? Just like if we did it to the upside, it would be a sign of weakness, right? Right? So this would be considered a DWP, right? Right? You got to be able to pay attention to these kind of movements right here, where it just crash and burns and then instantly recovers, right? Right? Because this is a sign of strength, right? And a lot of you guys don't realize that, right? So now, all right. So let's rewind and get our 930 on here. All right. We go away. Oh wow, that looks almost exactly the same as
Yes,
yesterday.
I
Huh.
was going to message you on that actually because we spoke about it. You
Yeah, the
pointed that out. Yeah,
repeat and
yeah.
structure theory that I've been working on for years and still can't crack it.
One day.
11:45 to 13:15, just like this. Right? If it's going to reverse, it's going to reverse usually in this hour, right? All right, we're moving away from the 930, right? And then we start taking out hourly lows during that reversal period between 11:45 and 13:15, right? But here's the key, right? As we're taking out lows, we have to take these. Let me delete this box. And let me turn off that, right? We have to take into consideration the fact that, yes, we took out the low, right? Whenever we take out a low, whether it is previous hours low, whether it's previous H4 low, previous day low. And shut the fuck up, Sapphire Trader, Nancy Pelosi. Like, we have to pay attention to these signatures, and this is why I tell you, like, no one's coming for you. No strategy is going to save you. Your ability to read price around a fixed, constant variable, or whatever you see the market with, and make decisions from, is key, right? So right here, right, is 1205. We took out the previous hour low and we sucked instantly back into the range, right? We stepped above the 5-9 box. We found footing of it. We stepped above previous hour mid. We found footing around it, right? We found footing on the 5-9 50%, right? But then we come up to the next hour, and what do we instantly do? You have to make decisions. And if you were buying this, right, because we took out this previous hour low, you have to buy. For me, I would buy this as a market reversal going with a continuation to the upside, or I was already in it, right? So for me, if I was going to start a new position, this would be 2 micro contracts, because this is very appealing to say that we're reversing. But then the next hour opens, just like the next month opens, new NFP Friday, new 5-9 box, same concept, right? And what do? We instantly lose the previous hour mid, which shows me it's a sign of weakness, right? We come down, take out this hour, we suck back into the range. It takes most of the hour to suck back into the previous hour's range. We step above and find footing around the 5-9 box, and then we finally get above this previous hour mid. So right now we have nothing. We could play this as a reversal, but we do know that when we start this hour, where are we in relationship to the previous hour? Now we have a new month or a new hour, a new NFP, a new 5-9 box, right? And we can see that we're above previous hour 50%. So if we didn't start a contract or start a position here with a fourth of our size, we can start building a fourth of a size there. Or we can say we're in a ranging market and we need to buy targeting low-hanging fruit, right? All right, so this would be considered a DWP.
Fractals as well, right? When you were talking about and referencing the boxes, the 5-9 box, the NFP, it's just that's a fractal. It's what you're describing is the behavior in a smaller time frame, right?
Yeah. All right, so now this one is not a DWP, right? This is a range, right? Because out of this whole day, 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes we trend. All right, 9 minutes, right? But what do we do? What did we say range? The range is defined by pushing away from the 930 and returning to it after 12, or we test it 4 or more of the 8 hours in the RTH. 1, 2, 3, 4, 5, 6 of the hours we touched at 930, right? So we consider this a range day. The other style of range, right? We push away from the 930, right? Between 11:45 and 12, do we reverse? No, we reverse at 10:25. But we still, what do? We range and slowly grind back to that 930 price. So this is a range day, right? A confident trend from 48 to 10, so 20 minutes worth of trend, right? What kind of day is this? Asking the audience. And let me put oh boy in here before I forget. Linus 50. Did I spell that right? Y.
45.
There it is. All right. So what kind of day is this? For Asia, Lucky Cat, what I do is I do range-based trading if I'm going to trade Asia. This quarter, I'm not trading that way, but last quarter I made a fortune trading Asia. This quarter, I'm trading just New York. All right, what kind? Is this a DWP, a DNP, or a range? Based off the rule set that I gave you.
We'll take a sofa. Finger us buzzers, boys. Come on. Hey, Bernie.
Bernie, why would you put a question mark there? Say it with your chest, man. You know this is a range. Did we spend 4? Did we move away and then return to? Did we spend 4 or more hours touching the range? Right? Or 4 or more hours touching the 930. Right? All right. So with that being said, right? Let me find a DMP real quick. The last one I think we had was September 11th. Yeah, I believe it was September 11th.
It just went.
Yeah, it was September 11th. Right here.
Yeah.
All right. So we moved away from the 930. We reversed around 11, but then we spent 1 hour getting above previous hour mid, taking out previous hour high. Can't get below previous hour mid. Can't take out the low. So 1, 2, 3, 4, 5, 6. 6 hours stair stepping up.
Yeah.
Right. This is a DNP. Right. These are, for some traders, this can be hard to trade, right? Because they're like, oh my God, we're in premium. I can't buy up here. I'm at price risk, right? Remember, we have data risk and we have price risk, right? Well, the data is telling you, clear as day, that you can't get below previous hour mid and you keep taking out previous hour highs, right? So with that being said, you have to buy at a price risk, right? But this is one of those days where it's very forgiving for people who buy in a price risking market. And so the whole purpose of this day and what we were discussing is using identifying market conditions through hourly boxes and 5 nines, and then identifying and categorizing what type of RTH day is actually developing in front of you using the 930 as a constant variable, right? In these 3 sets of rules, right? Because now what I'm hoping will happen is that during the day's RTH, if you practice this, and I've done this for 4 years worth of data so far, you're going to realize that you have more range days, quite hell of a lot more range days than you have DWPs, and you're going to have hell of a lot more DWPs than you have DNPs, right? And then, like, it's just a practical exercise for you to use so you can start identifying the market conditions with these boxes. So when we come on here and we do our highest probable trade or highest probable levels, now you have the live price component to synchronize it with and to trade around. With that being said, I'm going to jump because I want to spend some time with you, Coach, still working on this project before I actually have to go to work. All right, so hopefully this is helpful.